All right, welcome back to Market Day Report. I am the Cow Guy. That's Scott Shelty. Thank you very much for. And you know what? You can follow me on Twitter at Scott the Cow Guy. That's a good place to get what I do and all the places I go. And I'll be in Mechanicsville, Virginia, Wednesday and Thursday, talking to the Virginia Soybean Association. So we'll get to know those folks too. It's great to get out and about. But let's take a look at what we've got in front of us now. And that was a negative board the last time we checked. Let's go take a look at corn. See, we were only about a penny to a penny and a half lower the last time. It's actually come back a little bit. Look at that. It should be like a small golf clap for the D's new crop. That's up just 1 tick, a quarter cent. But let's go to the March. It's off a penny. 441 3/4 is last. Look at we've only had a 3-cent range, folks. So not a lot going on there. 441 3/4 is last. And let's go out to the new crop D's. Look at that. We're 477 even. We're up 1 tick, a quarter cent on the day. So that's a quiet board, and I expect these things to kind of be that way going into that WASDE report on Thursday. But we'll see. Let's move from corn to beans. Beans, well, they're kind of trying to make a comeback here as well. March is up or down only a half cent, but it's up to 11.88. That's better than the last time we saw it. We've got May down 3/4 of a penny to 11.97.5. And I would say that 7.5 cents off the low of the day and about 8 cents from the high. So I mean, between us, it's pretty much right smack dab in the middle of the daily range. Let's take a look at wheat in Chicago, the Chicago wheat market. Let's go 7 3/4 cents lower in that front month. That's March, 5.92 evens last. We've lost again. The 6 handle there is gone. May, trying to hang on to it. Look at the low, 5.98 1/4. We're right now at $6 even and 3/4 of a penny. We're making I think that's going to probably be a battle all day today if we can keep the 6 handle in the May wheat in Chicago. 7 1/4 cents lower now to 6 even and 3/4 cents, and that's May. Moving right along, he says, to the hard red in Kansas City. 10.5 cents lower in that front month. That's March. 6.14.5 is last. A penny and a half off the lows there, and we're a dime lower in the May to 6.12 3/4. Moving right along to the spring wheat in Minneapolis. That's 8.5 cents lower there. 6.91 1/4. We've gotten below that $7 line, and we've also lost it in the May. 8 1/4 cents lower there to 6.93.5. And then finally we'll go to the cotton, and we'll get to our guest analyst. Cotton's down 41 points to 86.70. 19 points off the low of the day. Let's bring in our next guest analyst, and that's going to be Chris Swift, Mr. Swift from Swift Trading. Sir. Chris, thanks for being on.
Absolutely, Scott. Pleasure.
Anything jump out at you there that we talk about?
Absolutely.
Okay.
We're in a bear market in grains. Let's just go ahead and call it what it is. It's a bear market. But most interesting, last week showed us a revision of the crude oil market. We've been trading in an inverted carry for months on end, all through the summer. We even went through that last part of the fall of the year where we had the little scrap in the Middle East and stuff, and that's still going on. And yet now energy is taking on to a carry charge form. It's ever so slight, man. It's only a couple of ticks each way, but it's a huge difference between where we were trading 60 and 70 over in the front end. So now we're getting other markets that are starting to take on bear market formations, and the grains are already in a bear market and doesn't look like they're going to let up. And when you look at that carry in the corn, we already see March trading under where December went off the board.
Right.
March goes off the board, May goes under that, and so on and so forth.
Do you get the feeling that, I mean, I've been saying this pretty much at every segment. It feels like to me that the funds are just fat and happy right now. I mean, show me a reason. Make me get out.
There's not a reason for them to have to cover. Right. I mean, there's really not. We got a huge demand problem out there that we really need to spur some demand. And again, now that we look at grains as being part of our fuel and just going over the fuel issue that we just did, it doesn't give you a lot of hope right now.
So the dollar is getting stronger. That's going to make us less competitive. That's
Absolutely.
Not good. There was a report last week of a chicken place in the southeast coast that was actually importing in beans from Brazil. I heard. I don't know.
They're cheaper.
Right, and so those types of things are going to keep the funds are going to keep their strong hands in that short. Right?
Yeah, and there's really no reason that I can see for them to let up. And even if they do, it's kind of like a dead cat bounce. And really, what happens is they just stop selling. They don't have to buy back anything at all. They just stop selling because they put so much paper out there for the market.
And there'll probably be a wall of selling if we start to see things rally because there's a lot of unpriced corn out there.
Well, and look at beans. Only the July contract now is a 12 handle even more.
Right.
So, we start losing those things and we don't pay any attention to it, but pretty soon you might lose that 11 handle.
Yeah, I know. All right, stay right there. We're going to go away. We're going to pay some bills. We're going to go back and talk more with Mr. Swift from Swift Trading right after this. All right, let's welcome back and let's get right to it, right? Let's take a look and see what we've got going on in the livestock. I've got live cattle pulled up there because I'm trying to stay ahead of the game here. We've got an April board that's down 12 cents, 183.62. Not a lot going on. We lose as we go out the deferreds. 37 cents lower in June, down to 181.40. That's live cattle. How about feeders? Now, we were a little bit better on the day in both of these, but they've kind of slipped to a little bit of a lower board. This one, kind of really trading weak actually right now. March down $1.15 to 243.65. That's about 50, 60 cents off the low of the day there. Let's go all the way out to SEP. That's down $1.40 out there to 270.95. So that's weak as well. And lean hogs were weak anyway, and they've stayed that way, right? April's down $1.37 to 82.45, while May's off $1.67 to 86.85. And I've gone through those a little quicker than I normally would, Mr. Swift, because I think you brought something.
I did. I got a chart.
Show and tell for the class.
That's absolutely. That's right. So we talked all last week about the snowstorm that happened, and did it really disrupt production or did it disrupt distribution? And so this chart is a really good chart to show that it only impacted distribution and not so much disruption. So here we can see we had huge gains. This is the weekly stocker and feeder cattle marketings. We had huge gains last week, and even above all the other previous years. And then if we go to the next chart that's up there, it kind of shows really clearly how we can see the green line. We were under for the last 3 weeks. We've been under all of our present marketings there. And then last week, all the snow melted. The cattle began to perform a little better and up, and we see now huge amounts of volume traded. So if we think about what's happening in that June, April live cattle, well, the cattle that we would have placed in January would have been our June cattle. There should have been a lot of them, and our price historically is lower in the June time frame than it is in April. But lo and behold, we placed a lot of cattle in November and October of last year. Those are going to be our April cattle this year. Plenty of them on feed. They're going to straighten out. And so now we've got this really narrow spread between April and June that could potentially, before it's all said and done and April goes off the board, we could see April trade under June. I think that would be a first time ever.
And to your point, we've had Carly Garner. I don't know if you know, she's on the show.
Sure, I know
right
very
now,
well, yeah.
And she put out something that was kind of counterintuitive, but not counterintuitive, against the group, but she wants to buy puts, sell calls, and cattle. She thinks this is an opportunity here. Everybody's getting all excited. That negative sentiment's gone away.
Right.
The water's warm. Let's jump back in again. She's like, not so fast.
Yeah, it's these are, well, when you look at the feeder cattle futures price versus what the cash is going to pay, and so know that even with last week's higher cash, the cattle feeder still lost $300 a head, and he should have been losing probably $330 were it not for that $3 gain in the cash market. Not all those cattle that we priced high in September are dead yet. So not only that, now we got to look at even paying higher feeder cattle prices out there. It is a conundrum, to say the least.
All right, that doesn't smell good from here. All right, appreciate you coming on and letting us know that. That's
Always
great stuff.
A pleasure,
All right, Chris Swift, thank you very much.